Hey traders, Raghee here. Welcome to Charts and Coffee. Happy Wednesday, everybody. Great to see you all. All right, so we are kicking things off, as you can tell by the calendar, with what we're going to be dealing with today. Yesterday, gosh, who wasn't at the mic yesterday? Really, and then rolling into Tuesday, or sorry, Monday, rolling into Tuesday, and now December 1. Happy December, by the way, everybody. We are now dealing with the, about 45 minutes ago, ADP non-farm payroll that sort of clicks the market into the countdown into non-farm payroll mode, but not so fast, right? Normally, we don't have this little thing at 10 a.m. called Fed Chair Powell testifies. So here we go again. Manufacturing PMI numbers will be released at the same time. Yellen's going to speak at some point. We have crude oil inventories coming out. This inventories release probably, look, either it's going to be very important, this inventory release that we see down here, either it's going to be super important because it's going to foreshadow the tone of OPEC, or OPEC's already figured out what it is they want to message the market, which is exactly what I think OPEC has in mind, which is, oh, you want to release petroleum? Great, we're going to cut production. And so I think that ship has sailed, and we'll see between today's inventory number and that OPEC messaging what is coming up. And so when traders ask, is it time to buy crude oil? Is it sitting at some sort of low? And then you think about the catalyst for a low in crude being put in, and the possibility for oil stocks then to start moving up. A lot of that's going to depend on tomorrow. All right, so as always, thank you for being a part of the Caffeinate and Dominate crew. Let's jump into your questions. All right, so kicking it off with, all right, we have Tim. Good morning, Tim. Is it time to jump into long IW? All right, let's head over to charts. Is it time to jump into long IWM off the 200, or wait for another confirmation candle? So Tim, I sent out an alert to the mastery, and I believe we did this in the futures room as well. And that is, we're already looking for that opportunity in the window between 2207 and 2105. And then let me show you what that looked like. So I've just jumped on over to the 5-minute chart, and we took advantage. Really, here's the RTY, and we wanted to see RT. So I know for some traders, it's been an interesting journey into, all right, if we're going to trade the ETF, we really need to keep an eye on the futures. Yeah, and that's something I'm going to do a whole lot more of in the mastery, of course, in the futures rooms too, as we go into 2022. I'm looking at our triggers, and yeah, it was right in here. So we ended up taking a little bit of heat, which is fine, because for some traders, they got even a better fill than I did, but definitely within our percentage risk tolerance. So we're in already from yesterday morning. So am I waiting for a confirmation candle? Nope. Alert sent, and trade engaged. So thanks for the question. All right, next up is AJ, Microsoft. Sure. So Microsoft is, of course, the XLK conversation. And, you know, we watched Apple. I'm sure some of us watched Apple yesterday, being all sorts of tall and awesome. But remember, Apple as a part of the XLK, look, it cannot be the only stock that leads the XLK higher, or even leads the broader tech average higher. It needs some help. It needs some company. It reminds me of a story that I think Trish told me a long time ago. And she said that, and for those of you who don't know, Trish is the one that designs the classes and all that kind of stuff here. And she said she heard an analogy. I'm sure I'm screwing the story up, but the meaning is this. So one horse can pull 800 pounds. And then two horses, you would think, all right, can pull 1,600. And it wasn't that. Two horses can pull something along the lines of 3,200 pounds. So I kind of look at the way when stocks can move together, it's not just Apple and Microsoft can simply move 800 to 1,600. No, it's 800 to 32. Because when Apple and Microsoft move higher together, XLK moves higher. When XLK moves higher, it takes the QQQ and then it just feeds on itself. So the bottom line is, do I want to buy at Microsoft? Well, let's stick with our process here in Charts and Coffee. Double green, pull back to the wave, green grab candles. Absolutely. That's a buying opportunity inside or at the wave. All right. So thank you for the question, AJ. OPEC will do what they want. That is very true. OPEC is basically, if you think about it in terms of a central bank controlling currency, all right? What you have with OPEC is, they're a central bank controlling their currency called crude oil, 100%. 100%. Let's see. John asks, with an overnight high in Apple, we will retest that high during the real. Oh, I don't know. Will we retest? I think, to your point, there can oftentimes be sort of a magnetic type gravitational pull. I'll watch the volume, but I'm with you. I don't want to bet against Apple. Yeah, I don't want to bet against Apple. Your long calls, brilliant. I'm with you. I'm absolutely with you. So, do I expect new highs? Look, I'm very bullish going into December. I know there's a lot for the market to digest, but we've already seen a number of sessions where the market has digested, whether that be variant, whether that be the transitory statement about inflation. Those are all stories, right? And nothing grabs the brain's attention as much as stories. And so those are stories the market had to discount, bake into the cake, as it said. And then I think the way in which the broader averages sans the Dow, right? The Dow is always going to take some of this news the hardest, mostly the variant news. And then when we see what the 10-year yield has been up to, I actually think where we are in the 10-year yield could be interesting for tech, but we're still stuck in a range. So whether we're at 1.4 or 1.7, it's all pretty much a well-beaten path. So there's no longer really a reason to go, oh my gosh, we're at 1.7, been there. Oh my gosh, we're down to 1.4, been there. So what is going to be new? What is the next shock? And barring a shock, I see that overall, we could just sort of slip into the end of the year, the next phase, the next stage of that end of the year type movement. All right, so next up is, let's see. We talked about IWM, talked about crude oil, OPEC being a central bank, Microsoft, love the question on Microsoft, Freeport-McMoRan. So let's take a look at FCX. So FCX is a conversation that really takes us to XME and SLX. SLX is not really doing all that well. I mean, it's a double red. I don't really want to buy SLX. However, XME, in contrast, not great, but XME is sitting at an entry level not unlike what we just bought in the Russell, in IWM or RTY futures. So in this case, if I take a look at XME, and I can't recall if I have that volatility data. I believe I do, and I do. All right, here we go. So when I look at, darn it. When I look at, so what I was looking at is whether or not we have the day of the week price movement. But what I'm curious about, we could extrapolate it from here. So my typical price movement, when I don't have that daily number, so let's see, 43.05 minus 39.20. Oh, I guess I could have done that in my head. So 385 is the number. What's 385? If we exceed a range for a session, a single session, 385, we really should wait for ideally an inside candle. I love the inside candle setup. Minor lows are great. Inside candles are better. Nice, really subtle, but it's there. A little volume ledge right in here. I think that we could look at XME or heavily weighted stocks that are relative outperformers within XME. So yeah, it's going to be, when I'm in the mastery today, we're going to do some day trading as we do in the mastery on the Wednesdays. And then we're going to also take a look at some longer term time frames, probably after 10:30 or so. I would think XME would be on the radar for us. And so where does that leave Freeport McMoran? I think it could benefit. It's a relative outperformer, I believe. I think it could benefit from that group of stocks moving higher. But where it sits right now, Mark, definitely put it on the watch list. But I don't see a tremendous edge in entering in this area. The edge that I like is, well, quite frankly, our advantage, which is somewhere between the VWAP and the 200 propulsion, which would put us down in that area, right? Which we touched on. You can see here on Monday. All right. Okay. Next up is Roku and Hood. Okay. So Roku's a short. Roku's a short on the rip. I've been getting a lot of questions about some of these names that are weak and whether or not there's an opportunity to buy. Please wait for the lower level of the JT multi to go yellow. And then I would also look for some kind of 1, 2, 3, right? Look for a 1, 2, 3 pattern in that yellow environment. If you don't know what that is, if I just spoke a completely different language, check out countdowntrader.com. So head on over to www.countdowntrader.com and you'll find a lot of these patterns and processes that I talk about are explained in videos and in write-ups at that blog, at my blog there. So you can also sign up so you're sent the update as they come out. And 1, 2, 3 patterns were something we spent quite a bit of time. Trish broke that pattern down. It's something I've been doing since I was a teenager. It's a classic Charles Dow pattern, and it kind of looks like a lightning bolt, right? So you can see that there. That's what I would look at. In the meanwhile, short the rip, right? As a trader, short the rip. If you're thinking I want to take advantage of this as we go into the year end, please, please, please don't. One of the things that we're going to do a lot more in the mastery come January is there's a very specific way in which rotation works differently in December. So window dressing type approach as opposed to January, where it's a clean slate and there's a rebuilding of the portfolio approach. And it is a complete 180 from one month to the next. Now is not the time to look for some of these downtrends to reverse, but come January, there's a specific process that will allow us to take advantage of that psychology. For now, just remember, this is not a sector rotation environment. So thanks for the question on Roku. The second is Robinhood. Yeah, I want nothing to do with this. I don't have anything against Robinhood. I've got it on my, I've got it on the phone. I've played around with the app. Good for them. They went public. And what was this one? This was a DPO, right? This looks exactly like a DPO chart. So when you have a direct listing, that is ringing the cash register pretty much within a few days of going public. And then, that's not unusual. IPOs are different. There's that quiet period. There's that holding period. None of that with that DPO. And you will see absolutely the backside of the mountain type pattern right there. So another double red. Now, if we're going to see, again, that psychology, right? I love that you picked 2 double red markets because, again, there's 2 ways we can look at this. One, can I buy it? For now, the answer is no. Maybe yes in January. But this is a double red market, and I cannot buy a downtrend. I cannot buy into a downtrend until that downtrend segues into more of a neutral pattern. And then we get the actual chart pattern that I think denotes a higher probability of that trend reversal. So thanks for the question. Gold, gold has been tricky because getting a read on real yields has been tricky. real yields is what? The nominal yield of a bond minus the rate of inflation. And bond rates have been all over the place. What the heck is inflation? We're not really sure because the messaging and the numbers have been two different things. Whenever there's confusion about where we are from an inflation trajectory, the rate of change, and where we are in terms of bond yields, real yields get very tricky. And when real yields are tough to put a finger on, gold becomes really tricky. Now, you don't need to know all that necessarily if you simply look at the structure of the market. When you see the mix of red and blue and red, blue, and green, and then you see this yellow JT multi down here, we don't have structure that's trending that indicates that a large group of market participants are thinking in the same way. So maybe short-term time frames, but I don't really have a great edge. I don't have an edge that I love in gold. There are some interesting levels I'd like to buy. Hence that little orange alert line is down there, but I can't say it's a huge priority right now. Yeah. Net, crowd, and hack seem to be rebounding. Any thoughts? So net, we looked at net, I believe, earlier this week, and that's a green. Even though it's gone yellow recently, the trend that preceded it was up. That means in this area, we want to be a little bit more conservative, but it is a buy. It is a buy. It's either don't do anything with it or I'm looking to get long. So net stabilizing. It's still a double green. It just lost some of its swagger, quite frankly. CRWD, I don't see, frankly, any sign yet for me of rebounding. In fact, it's taken the first step, taken three important steps to looking like it's going to do the opposite. South of the 200 propulsion, it's south of the VWAP, and we've just gone red over red. Now, if earnings can help, if there's anything that can help create a sudden shift in the perception of the market or trend, it's the central bank, and that's what much wider index and sector-wide shifter, and earnings, which could change sort of the opinion of an individual stock. But no, I don't see anything about crowd for me in rebound mode. Not yet, not yet. It's fragile, meaning the downtrend is fragile. So if there is a time for the bulls to step up and change hearts and minds, it's going to be this week, I would say. As far as hack, I don't know about, again, rebounding, but is it near a support level? Point of control, 200 propulsion, and the VWAP, there's a lot to like about hack between about 61 and 60 and a half dollars. And it's still above the mean on the V score. Yeah, I like hack. So again, I don't see anything about it that's necessarily indicating a rebound, but I do see that if there is a spot where buyers will say, this makes sense to us, we'll step in here, this would probably be a really good zone for them to show up. All right, so crowd is no, net is definitely, net's the best one. Net's the uptrend that we would expect to see continue. After that, hack would not pay attention to crowd. All right, so next up is XLV. So all my cards on the table, we're long XLV. Not going to be a lot of fun on the open. However, it has been a relative outperformer. Look, it's really important for someone it's on this side of the mic to say, look, there are certain times when we're going to have to take some heat. And as long as that can withstand our percentage paper cut tolerance, great. That's one of the awesome things about buying options the way we do. When you reduce the cost, when you use timing and momentum to your advantage, your tolerance for slightly lower low is higher, and your tolerance for paper cuts should be pretty darn good because the cost of the option isn't so debilitating. This isn't as if we bought a $40 option and we're losing a chunk of that. This is more along the lines of a far smaller initial cost basis. So not my favorite looking chart this morning. If we have to cut it loose, we'll do so unemotionally, take the paper cut and put the money back to work somewhere else. All right, so thanks for the question on XLV. So I'm just following the risk management strategy at this point. Jim mentions, thank you, Atomic Focus is really good. Listening to it on Audible now. Oh, I'm so pleased. Yeah, I had not read this one before, Jim. It's brand new to me. It just came in the mail just the other day. Yeah, this one right here. And I'm a huge Patrick McCowan fan as far as breath work and the way that he explains the science behind it. And yeah, I think it's definitely something I'll be rereading a couple times. So yeah, thanks. I'm glad you had a chance to take a look at that. Very cool. All right. And just like that, gang, we are out of time. I really appreciate the questions. There was a question about UPS that I just saw at the bottom of the list. And PJ, yeah, I'm going to pass on UPS. Now, we were looking at a couple of other names in XLI, IYT. Oh my gosh. Yeah, there were a couple names. Take a look at the breakdown. There are some names that are actually relative outperformers that are much more green than going red and going double yellow. CSX, I believe, was one of them. CSX was definitely on the list. And so, yeah, I would take a look at something like that. If any of these types of names at all, but CSX was definitely one of them. All right. So this is this is it for Charts and Coffee for today. Happy December again, everybody. Remember, we have a lot more fireworks the remainder of the week. Powell and Yellen again today. We've got non-farm payroll on Friday, but overall, I'm quite bullish going into December. Not only from the typical rhythm of this month, but also based on some of the extremes that we've sold off to. I would not be too ambitious with some of the Dow related names and sectors, but when it comes to tech and even small cap, there are some really good tendencies, bullish tendencies for this month. All right, gang, be good to each other. As always, thanks for all your questions. I'll see you tomorrow.